Hi guys, my name is Kif Momaguju and welcome back to another tutorial where we are going to cover company specific fundamentals. Remember the previous two sections that we covered. We were looking at market specific fundamentals where we looked at the level of participation, the trades, the volumes, and how to calculate the share price, all that. But in this section of the tutorial, we are going to cover on company specific fundamentals. So these fundamentals, by the time we calculate and explain everything, you understand, you will be fully equipped on how to just analyze any company by just looking at the price earnings ratio, earnings per share, price to book ratio, price to revenue, shares issued, and market cap. So in this tutorial, I'm going to just explain everything. Okay, we are going like what we did in the first section of the tutorial. Just to explain everything, I'm going to give you all the formulas in this tutorial, and then in the next tutorial I'm going to cover computations. Okay, we are going to calculate the PE ratio, the EPS, price to book ratio, price to revenue, shares issued, market cap. Okay, so without wasting time, let's dive right into it. Okay, right, so we want to start by looking at the shortcut, you see, for Econet, because if we scroll up there, and on the right side of this screenshot, you can see there's a shortcut there, eco.zw. Okay, so most of you guys, I think you might not know the reason why it has been included in that, as we can see in that screenshot. So the reason here is companies that are publicly listed on the stock exchange, we call them counters. Any company that is publicly listed, it's a counter, right? And those counters, they are not recognized by their full names, like they are known in the external world or in the outside world, outside of the stock market. Because like this Econet Zimbabwe, here we just know it as Econet Zimbabwe, but there at the stock exchange, they know Econet Zimbabwe as eco.zw. So that eco.zw is called a company ticker or a counter ticker. Okay, you understand this as we go on, right? So let me just first of all start by just writing counter. So I'm just saying counter ticker. Okay, so I'm just saying so let me just say counter. Okay, and then here write Econet Zimbabwe. Okay, that's a counter. Okay, because it's listed on the Zimbabwe Stock Exchange. So let me just say here eco.zw is Econet Zimbabwe's identity on ZSE. Okay, perfect. So I think this is self-explanatory. So I said any company that is listed on the stock exchange is called a counter, but a ticker, it's a company's identity on that stock, on that particular stock exchange, right? So now that concludes that part, the shortcut. Okay, so now let's look at the PE. Okay, the price earnings ratio. Okay, price earnings ratio. Perfect. Let me just hit right. Perfect. Right. So the price earnings ratio, it shows how much investors are willing to pay for dollar of company earnings. All right. and the current stock price, and you can calculate the PE ratio as current stock price divided by earnings per share. And the PE ratio is a metric that is used by growth investors to value companies. And you can also calculate the price earnings ratio is market capitalization divided by earnings. We are going to look at all these formulas in the next tutorial so that you have a clear understanding of how we use these formulas and how PE ratio is calculated. Okay, but for now, just take notes. So I'm just going to write here, shows how much investors are willing, to pay for a dollar of company earnings. Okay, perfect. And now let's borrow that icon here. I love these icons now. So let me borrow this. Let me just do Control D to duplicate it, and then I drag it here. Perfect. Right. So let me just position it here. Cool. Now let me just do this. Perfect. So price earnings ratio, perfect. Right, let's look at something. So we are still demystifying it. So I'm just saying here, current stock price divided by EPS. Okay, right. And we can calculate this also as market capitalization divided by earnings. Okay, so we said it's a metric, or is a metric used by growth investors to value companies. Perfect. So let's borrow again this little icon there, this shape. Perfect. So let me just position it here like this. Cool. Looks great. Right. So it's a metric that is used by growth investors to value companies. Okay. So don't worry, we are going to look at the workings, and you will see it's very easy to calculate. Very, very easy. Then let's look at earnings per share. So earnings per share, it's a metric as well that is used by growth investors, both growth and value investors, to measure the profitability of a company, right? And here you have to note something, right? The EPS shows how much of the company's dollar of earnings a company is making for each share that is owned. How much of the company's dollar of earnings a company is making for each share that is owned, right? And we can compute the earnings per share as net earnings minus preferred dividends divided by the number of outstanding issued common stock. Let me show you what I mean, what I've been saying. So as I said, it's a metric that is used to measure the profitability of a company, right? And here I've got a hint for you, right? I've got a hint for you. So the hint is the EPS shows how much of the company's dollar of earnings a company is making for each stock owned. Okay, perfect. And let's see how to compute this. So we can compute the EPS. So let's just say EPS here, and let's put some space here. We say net earnings or net income or net profit. So net earnings minus preferred dividends divided by number of outstanding issued common stock. Perfect. So I love these icons a lot. So I'm just going to drop this here. I'm going to take this. I'm going to drop it here. Perfect. So see, so it looks great. So don't worry, we are going to do the computation for this so that you can understand better. Now let's look at the price to book ratio. Okay, so the price to book ratio is a metric that is used to value companies, and the formula can be written as market capitalization divided by book value, or it can also be written as market capitalization divided by equity, and sometimes it's referred to as the price to equity ratio. Okay, so let's just do that. Metric used to value companies. Okay, and the formula can be written as market cap or market capitalization. I just love to write it in full, divided by book value. Okay, or we can write it as market capitalization divided by equity, and also known as price equity ratio. Okay, so that's perfect. So we are going to do all these computations. Okay, now let's look at the price to revenue, right? So price to revenue, we use price to revenue to value companies that are not profitable. Okay, let's say it's a company that is in the high growth phase, or it's a company that has just been listed on the stock exchange. You know, there's been an IPO, initial public offering, and that company has just got listed on the stock exchange or stock exchange. So that company, there's no way that it is making profit, because it starts with negative cash flow and negative profits. So that company, investors invest in it with the anticipation that in the future the company will be profitable. So you can only value this company using revenue, because obviously the company is to make revenue, if to generate revenue. So that's where we use, and normally investors who use this type of metric, they are growth investors. You know, they are concerned about the long-term growth of their investment, of their returns. All right, so let's just look at the metric here. So we are saying metric used to value companies that are not profitable. Okay, so metric used by, let me just put growth investors to value companies that are not profitable. Okay, and let's say how to calculate this. We say price to revenue. Okay, so price to revenue equals to market capitalization. So you see, market capitalization is very important. Market capitalization divided by revenue. So we just drop this and put it here. Okay, which is great. Right, so if we've covered this, that's good. Let's look at shares issued. Okay, So we are, let me tell you before I talk about shares issued. We are also, after the next tutorial that I'm going to cover, I will also delve deep into explaining all these fundamentals here. Okay, so don't miss that tutorial. Okay, so I'm going to explain everything. All right, so that's great. So let's just look at shares issued. Okay, so normally if you look at the commerce balance sheet or statement of financial position, you can see that there will be authorized shares and issued shares. Okay, so we need to demystify and differentiate what we need to see the difference between these two. Okay, so we are saying the issued shares are the units of ownership that have been already that the company has already issued to shareholders. And authorized shares, this is the maximum number of shares that a company is allowed to issue, or the company has been given authority to issue. Okay, all right, but we are going to cover that a bit in a while, in a few minutes. Okay, and because I've also got another section where we're saying issued shares, we just say issued shares are outstanding shares, and these are actual shares issued or sold to investors from the available number of authorized shares. Then authorized shares, this is the maximum number of shares a company is allowed to issue to investors. Okay, so this is great. So let me just say here, authorized shares is the maximum number of shares a company is allowed to issue to investors. So when we talk of issue, we are saying selling. Another word for issue is to sell. Okay, but when we are talking about shares, we don't say sell shares. See, mostly we use the term issue. Okay, so let's look at the issued share capital. Okay, so like I said, that issued shares, these are shares that have already been sold to investors. That's, I think you can understand that in those terms. So we are saying these are shares that have already been sold to investors, okay, or to shareholders. Okay, so let me write the word here, shareholders. Okay, because that investor became a shareholder and they bought these shares. Okay, so let's look at market cap. Okay, I think we've had fun for now, because I think we've covered market cap in the previous sections. So let's look at market cap. What is market cap? Okay, I think I've defined market cap before in the first tutorial, where we were covering the market value per share. Like here I said, this is the formula. The market value per share goes to market capitalization is equals to market value per share times the number of outstanding ordinary shares. But we are going to look at this anyway. So let's just conclude this, right? So let's just say it's the market value per share. Market value per share times number of outstanding issued common shares. Okay, so guys, let me just drag and drop this. Okay, thanks. So thank you guys for watching this tutorial, and don't forget to watch the next tutorial where I'll cover the computations. Thank you.